completely driven by investors' behavior, founders obsessing too much over fast growth at the expense of burn runway. So scaling economics that are unproven, that can also be very, very tricky. So forcing, the scaling of a proposition that hasn't reached PMF, obviously dangerous. Forcing it to go faster is like applying excess fertilizer to a plant. It may work in the short term, but probably messes up the economics and the ecosystem in the long run.
Welcome to Two-Sided, the Marketplace podcast, brought to you by ShareTribe.
Hello and welcome. I am Stuart, CMO at ShareTribe, and I am your host. Welcome to episode number 4 of season 3 of Two-Sided, in which we continue talking to marketplace investors. In this episode, I'm talking to Mira Mihaylova from Piton Capital. I was really happy to get this interview because I've known about Piton for a while, although, as you'll hear in the interview, I have always mispronounced the name. But they don't often do podcasts or a lot of publicity in general. Even their website is extremely basic. It's literally one page with a link to the Wikipedia entries for network effects, a link to their Crunchbase profile to track their investments, and a link to a contact form. So very no frills and just focused on investing, which is sort of confirmed from my conversation with Mira. What I really liked about this conversation is that she's making many points throughout the conversation, but she's pulling in all the time examples from their portfolio to illustrate some of the points. That made it for me really a lot more understandable. I hope you'll appreciate that as well. Some of the things we'll talk about, something that was new to me, I hadn't heard phrased like that, is what they call frontal versus lateral attack strategy. Mira highlights the challenges of launching a marketplace that directly competes with an established player, which they call a frontal attack, and instead advises founders to focus on a smaller adjacent market first to gain traction and then gradually expand into the larger market, which they call a lateral attack. I thought it was a very interesting concept. I hadn't heard about it in that way. But makes a lot of sense to me. And then very much related to this, how important it is to start in a small market. Mira explains how focusing on a niche can lead to faster product market fit and eventually still to scalability. And then related to that, why actually liquidity is the core of any marketplace. I think we've heard this before, but Mira makes an excellent point of stressing the importance of building liquidity before worrying about things like advanced tech or scaling. And then finally, also in this conversation, there's no way around it. We have to discuss the role of AI in disrupting marketplaces. So we talk about how AI can optimize marketplace operations and help founders stay ahead of competition. Please enjoy this episode. I guarantee you will have, again, a slightly deeper understanding of what makes marketplaces succeed, which, of course, is the goal of this podcast. Enjoy. Here is my conversation with Mira Mihaylova from Piton Capital. Hi, Mira. Welcome to the podcast.
Hi, thanks for having me. Really excited to be here.
Thanks for taking the time. I know it's a bit early on your side, earlier than on my side anyway. Looking forward to talking about all things marketplaces, but before we go into that and everything that Python does around that, can you tell us a little bit about yourself? What did you do before you became a marketplace-focused investor?
Sure. So I graduated mathematics in the UK, started my career in fixed income futures and options at Merrill Lynch Bank of America. So some of the boring
Okay.
stuff, I'm afraid. We all have mistakes, I guess. And after 4.5 years of that, I wanted to exit to a tech role, but wasn't sure what exactly is a good fit. So I did an MBA for 2 years, and during these 2 years, I experimented a lot. So I did internships at PayPal, which is big tech, Huddle, a US scale up, so more of a kind of the startup side in an operational role. Bucks and Tilt, which are fintechs, also startups. And I also
Yeah.
started my own peer-to-peer circular fashion marketplace that failed,
All right.
unfortunately.
Oh.
And and towards the end of the MBA, I found Piton as an option on our job board. So I ended up there in the end.
Oh, wow. Oh, wow. I had missed that because of course, I did a bit of research about you, but I missed the fact that you actually did a circular fashion marketplace. Oh, that is really interesting. I'm gonna definitely call that back later in the interview. Let's talk about Python first, or Piton. Is it Piton?
Piton, it's a
Piton.
rock climbing tool. I think it's the thing
Oh
that
yeah,
goes into the rock. Yeah.
I saw that actually in one of the founders' presentations, that they are like a tool to help people reach heights. It's actually very good metaphor. Yeah.
Mm.
So Python, could you tell us a little bit about Python, and specifically like what would say if these are founders looking for a partner, what sets Python apart from other investors?
So if it's a marketplace founder, I think it's a very easy sell. We are a fund that focuses only on companies with strong network effects. That's our bread and butter. We've done that
Mm-hmm.
for more than 16 years. And actually, my colleagues, Andren and Greg, have done it for, I don't know, 25 plus probably. We have a lot of pattern recognition around marketplaces, generally network effects businesses, which also
Mm-hmm.
include social, user generated content, libraries, even data aggregation businesses, some pure SaaS businesses that
Okay.
can become an operating system for something. But the marketplaces have been the bread and butter for us. Probably 60-70% of the portfolio, both B2B, B2C, peer to peer, doesn't matter as long as they have strong network effects. That fits.
Got it. Got it. Yeah. Okay. That actually takes a little bit of the wind out of my next question, which was going to be like, are there any specific industries? But apparently not. So you were more about the model than the actual area or industry that they're
Yeah.
in. So what stages do you invest in?
So we are agnostic on stage as well. We've
Mm-hmm.
done anything from pre-seed to growth equity, but the sweet
Yeah.
spot is late seed and Series A. So this is usually when we can see a little bit of a proven product market fit, a proven GTM or go to market to an extent,
Mm-hmm.
already something working. So this is
Yeah.
our preferred stage.
Yeah.
But we can be quite flexible. Uh,
Yeah, because I think most of our audience is very early stage founders. Of course, I understand sweet spot is one, once there's a little bit more, let's say, data to prove traction. But for the deals that are earlier, like, how do you evaluate a good marketplace idea from your perspective? Or if someone comes with very, very early stage, like what do you look at?
Oh, it's quite a list. So starting from the idea itself,
Mm-hmm.
a marketplace idea can be for a new market, or it can be a lateral or frontal attack on an incumbent in an existing market. If it's a
Mm-hmm.
new market, we always try to understand the space first. So, what are the characteristics of the underlying trades, degree of standardization, motivations of the participants, types of trade mechanism, what type of data is strategic, then what are the characteristics of the industry itself, degree of fragmentation, economics of the players,
Yeah.
value chain, uh, what are the information and trust requirements? Also, that's also quite important. Existing behaviors, workflows, practices. If we're talking about an attack on a existing established player, we
Yeah.
evaluate the likelihood of success because
Mm-hmm.
network effects businesses or marketplaces, the
Mm-hmm.
beauty is that they're very defensible at scale, right?
Yeah.
Usually quite untouchable, in fact. So
Yeah.
we prefer lateral attacks, and I
Yeah.
can dive into that deeper maybe later on or even now. So
Yeah,
we,
please.
if a company starts with a small adjacent market where you don't
Mm-hmm.
look like a direct threat initially, you fly
Yeah.
under the radar for a bit until you dominate that adjacency.
Mm-hmm.
Then you launch an attack from that adjacency into the main market. And that's a lot
Mm-hmm.
easier than just going head to head with someone who is already
Got
at
it.
scale. So we try to evaluate whether that adjacent market is a good wedge into the main market, because frankly, sometimes it just isn't. And
Mm-hmm.
yeah, as I said, frontal attacks are quite difficult. We have
Yeah.
considered them, and we will always look at them. But
Yeah.
it usually involves the company subsidizing at least one side for
Yeah.
quite a
Growth.
while.
Yeah.
Exactly. And
Yeah.
it
No.
reflects on the unit economics. It's also quite it's a long-term strategy to subsidize. It
Yeah.
takes a while. And here it's an interesting one. In some cases, subsidizing can be possible. So if you look at Uber with a somewhat homogeneous supply, in others that can be quite difficult even. So if you were talking about completeness on the supply side or selection, that it's just not gonna be easy.
So you mean that if the supply is homogeneous, then subsidizing is easier because the unit economics are more predictable or something, or like you know roughly what it costs?
I think it's easier to make your demand side happy with a lot less pain.
Got it.
If you need absolute completeness, so if you think of maybe restaurant reservations where you need location, availability for a particular time and day, and size of the table, cuisine, ratings. This is a very
Okay, yeah.
complex, and if for you to make the demand happy, you need to have all the restaurants on board. So that's going to cost
Yeah.
you an arm and a leg to subsidize. With Uber, you can subsidize a bunch of drivers initially to make your small demand happy. You don't need absolute completeness to basically have
Yeah,
a
yeah.
product. Yeah.
So it's about the ratio sort of needed like between supply and demand. Okay,
Do you
understood.
need
Okay, I never
absolutely
yeah.
everything, or can I
Yeah.
basically have a small subset and still have a product market fit?
Understood, understood. So frontal attacks, very difficult. You said you as a company or as a fund more enthusiastic about lateral attacks. Do you have any success stories from that strategy from the portfolio? Could you give an example, like, or that is maybe not yet fully beaten but is making good headway into a market?
Yeah,
Would it be possible?
yeah, absolutely. So we have several. For example, Vesper in the portfolio is a data business. They aggregate data on dairy products, something that's not very transparent. There are no price
Mm-hmm.
indices out there. So they're doing exactly that, taking data from the different participants, forming the price
Yeah.
indices, and it's a data product. They actually have now launched a marketplace now that they have all the different participants interacting with
Yeah.
the data product. So this was a wedge that didn't look like a marketplace and didn't start as a marketplace, but it went into to the main market, which is the trading.
Okay.
We have also Gringo in fintech. It started as a app for anything to do with your car. So consumer app,
Okay.
you can pay
Yeah.
your vehicle tax, you can pay for your fines, you can check the points on your driving license and so on.
Uh-huh.
Now that they have a lot of engagement in users and usage from their users, they're spinning a marketplace into insurance, financing, B2B buying of cars. So
Okay.
bigger players and anyone who needs a lot of cars, they can
Yeah.
source them through the Gringo network.
Nice. Okay. Yeah. And where is Gringo? What's the market? Like, where are they
So this is
active?
Brazil.
Brazil.
Yes,
Okay.
actually,
Yeah. Yeah.
one
Yeah.
thing I
Because.
didn't mention about Piton, we are European. We have two offices in Europe,
Mhm.
Amsterdam and London, but we do anything under the sun. So as
Nice.
far as Brazil, Colombia, Egypt,
Yeah.
Pakistan, you name it.
Yeah, that's terrific because that is, I guess, also my own sort of view of marketplace. Of course, like for creating content for ShareTrap, for learning more about marketplaces, I still have a pretty, I realize, like Euro US centric view. But okay, Gringo, I'm definitely gonna look that up. That looks super interesting. So was this marketplace play like on the table when you joined the round, or when you invested in Gringo, or was this
It was
something that?
an idea, I would say. So the
Mhm.
founders already had that idea, but it was
Yeah,
last priority. They had a lot of other things that they wanted to build.
of
We've
course.
never influenced them actually. We obviously keep talking about defensibility modes and
Network
network
effects. Yeah.
effects, but if the founders want to build a marketplace, absolutely. If they don't, that's also fine. We've had a company in the portfolio called Booksy. Actually, we still have it. Sorry, and they started as pure SaaS, and the marketplace was
Yeah.
not even on the table back then.
Yeah.
To your question,
Booksy, right? You
Booksy,
said, yeah.
exactly. It's a
Yeah,
beauty
very
marketplace.
interesting player, yeah.
Yeah, yeah, but pure SaaS when we invested, and they wanted
Mhm.
to be a pure SaaS at that time.
Yeah, because that was that's for beauty, right? They're originally from Poland, I believe. And
Yes.
was it so that they did the like what we've called in the podcast, this sort of like stay for the tool, come for the network type of approach, right? Like they had this booking software for beauty centers, I believe, or beauticians, etc. And then eventually turned into a marketplace. Yeah, that is a lovely story for people listening. That is a cool story to check out because that was quite a growth spurt. Because I think I learned about them first time at the marketplace conference, like maybe 2019, I would say,
Mm,
maybe, or 18, like long time ago. And I think now they're topping US app charts and whatnot. So yeah,
yeah.
that is a great story. So now we talked a little bit about sort of like green lights. Like when you evaluate pitches, is there some sort of common red flag that is a blind spot for people that sets you off on a marketplace? Early stage mistakes that you see made or essential problems in the business idea that you often see?
I touched on the small adjacency. I think
Yeah.
starting in the big market and trying to start in the big market from day one
Okay.
is a mistake usually. It will take you forever to build real liquidity, and in a marketplace context, liquidity is your product. So you will not reach product
Yeah.
market fit for a very long time. So that can be a problem. I don't think it's the founder's mistake or red flag. A lot of
Mm,
this is driven by investors' behavior. A lot of investors want to
mm,
see, can this be a multi-billion exit or whatever? And I think it's actually the investors to blame, if I'm honest. Completely driven by investors' behavior. Founders obsessing too much over fast growth at the expense of burn
mm.
runway. So scaling
Yeah.
economics that are unproven, that can also be
Yeah.
very, very tricky. So forcing, the scaling of a proposition that hasn't reached PMF, obviously dangerous. And
Yeah.
if you think of the marketplace, some of the best examples out there, they have a natural growth rate to them that balances
Hmm.
between supply and demand. And you have this
Yeah.
kind of flywheel. Forcing it
Yeah.
to go faster is like applying excess fertilizer to a plant. It may work in the short term, but probably
Yeah.
messes up the economics and the ecosystem in the long run. I would say a third one here, having a high take rate that is too
Mm.
high and encourages
Yeah.
leakage or just
Yeah.
messes up with the behavior of your participants. That's also one
Yeah.
that we see quite often.
Yeah, yeah. In your first point, you bring out something maybe important to address, that there are many good marketplace ideas that can be a great business, just not a venture scale outcome business. So indeed, like the fact that that's maybe indeed because of course, like many of the founders that are listening to this podcast might have ideas that are just perfectly fine, maybe even national marketplaces or a particular niche that is just not venture sized.
I think it's very important for these founders out there. There will be funds that will absolutely love you, and we are one.
Mm.
We don't worry about, is it a multi-billion, is it a billion plus? A small, well-defined niche will
Mm.
always have a way to expand into something. Might not be
Okay.
evident. It can also be quite beautiful on its own. We've seen
Mm.
companies that once they become dominant in a small market, small niche, they can
Yeah.
extract amazing economics. They can start upselling. Don't worry too much. And if the big funds out there don't love you for some reason, we're here.
Yeah. Okay. Oh, that's good. That's good. Yeah, yeah. So it's a little bit like this. I think some other investors call it this sort of like this Tom obsession, right? Like if you cannot prove your market at the very first slide, then they're not interested.
Yeah.
Yeah. And then something else you mentioned actually about this is maybe more of a like a, let's say investor focused question, but you mentioned about the growth at all cost things. Do you see that changing now? Like this post zero interest rate that there was a lot of like many years ago, couple of years ago. It was really like growth at all costs and amazing evaluations and a lot of money poured in. Like, have you seen that focus shifting? I don't know if Piton was maybe never part of that, but have you seen the changing behavior in the way that pitches are presented or other investors joining rounds?
A little bit, definitely, because the money is not there anymore in the same way it
Yeah,
was. But
yeah.
I think there's always some founders that are amazing at fundraising, and they will be able to fundraise, and they
Mm,
will be tempted to try. And I'm not saying that this is a bad strategy per se. It's been done many times in the past. But one always has to be careful. Does the upfront investment justify the end reward here? Because
Yeah.
in many cases in the past, it didn't.
No, yeah, there is a multitude of examples. Yeah. You also mentioned something else in your previous answer about a well-defined niche market. You said is always able to extract more money from the market. Maybe that's a good segue to a next question. Like, have you, like if you look at the history of marketplaces in terms of like monetization, it used to be like classified only, then a little bit of the transaction. Have you seen in recent investment in Piton any interesting monetization models or anything happening in monetization or in adding value layers or anything that sort of struck your eye as like, oh, this is an interesting way of monetization that other marketplace founders should maybe think about?
We are very agnostic here, and we have a
Mm.
range in the portfolio: transactional, SaaS, hybrid.
Mm.
That there's, as you said, there's some new layers now on top of the existing revenue models. It really depends on the context, I would say,
Mm.
and the underlying market. It really depends on how the economic incentives stack up and how they drive behavior. So
Okay.
I would say we're seeing a lot of B2B marketplaces that are now shifting away from the high transactional take for that reason. So in some instances, these transactional fees created psychological barrier to using the platform
Yeah.
for all transactions. So you end up with leakage, low wallet share, and that's a problem in B2B. And not just B2B. I mean, if you take again Booksy, this is a good example of a pivot, not a pivot, but a new revenue model. The old
Hmm.
version, the pure marketplace, was charging a transactional fee, and
Yeah.
that resulted in a really suboptimal product because beauty salons were trying to avoid the platform as much as they can.
Mm.
They were
Yeah.
canceling appointments, resulted in double bookings. So also the consumers were unhappy. There was a lot of support calls.
Yeah.
Really not a good outcome. And if you take
Yeah.
Booksy, they're doing SaaS, just pure
Mm.
subscription, and now
Yeah.
they're adding payments as an extra layer. So they're augmenting the subscription fees with fintech. And this
Yeah.
is
Yeah.
one area which we see a lot of innovation, marketplaces that embed fintech in what they do, in which looks
Yeah.
very promising. In terms of I think freemium is not a new thing, but it's quite interesting. It's probably the most disruptive and most difficult one. We've seen cases where it works and cases where it doesn't.
Could you give an example where it works?
Classifieds, it's an old example, but
Mm.
Auto Trader and CarGuru. I think CarGuru
Hmm.
started as a freemium, free for
Yeah.
the car dealers,
Yeah.
and that managed to build real market share over time. And
Okay.
it's still doing fine. Then, if you think of some equivalents to Booksy out there, I think that started with
Mm.
freemium. I think there the issue was supply quality, because freemium, unfortunately, sometimes will attract the type of suppliers that you don't want. It's the suppliers that
Yeah.
are absolutely desperate for work and for
Yeah.
customers. And these are usually the
Yeah.
suppliers that will not make your customers happy. And the other problem is also just psychological. Suppliers think that because it's free, I mean, there's no value in your product.
That's the risk of freemium in general. I'd like to say I'm stealing this quote, but it's about that freemium is basically like acquisition model and not a revenue model. So that makes total sense. Yeah, thanks. So have you seen anything regarding like new value added services that marketplaces are adding?
Yes. So a lot of the B2B marketplaces that I mentioned, this is something that they're doing a lot, whether that's quality check, verifications, logistics, fintech, financing, very big topic for B2B.
Hmm.
Even in B2C, so if you look at a portfolio company of ours like Ferry Hopper, which is a sky scanner for ferry tickets,
Yeah.
and they're selling now insurance, trip protection, meals, car rentals, plenty of upsell that you can do. With, I would say, no, not value added services, but there's a kind of a new layer of monetization, marketplaces that already have good usage can look into data sales, especially in the kind of AI world. But this doesn't always scale well. I wouldn't use data sales as the kind of sole revenue model.
No, that makes sense. Thanks, Mira. One last question, or actually, I have two more questions. But one question is, founders are always struggling with acquiring one side. There's always one side constraint. Do you have any interesting tactics that you've seen in your portfolio of companies using to acquire either supply or demand that is a little bit unusual or extremely successful?
Yes, I think creating value for one side or one segment without the marketplace liquidity will be a great example. And it's a very common one. And here again, we mentioned that for a marketplace, liquidity is the product.
Yeah, yeah.
You need to build something that is already usable before you even have the other side. Again, take Booksy with the scheduling or booking software, which salons can use without having any demand side on the
Yeah.
platform because they onboard their own
Yeah.
customers. So that's easy. It can also be, as I mentioned, a segment. There's a company called SuperDoc, which is a marketplace for patients to find, discover, and book
Okay.
doctors. They initially went after the
Yeah.
GPs. And this is an interesting one because GPs, they have way too many
Okay. Yeah.
patients. In fact, they don't
Mm.
need any more
Yeah.
new
Yeah. Yeah.
patients, right? But they would love to have something that helps them schedule, fix their calendar, and so on. So the GPs could find immediate value, while the specialists couldn't, because for specialists, finding new patients was the number one driver. But if you start with the GPs, they bring all the patients because they onboard them. And then once you have all the patients, you go into the specialists. So this is starting with a particular segment where you might find an easier, faster product market fit. I think AI is an interesting one here because AI could unlock a lot of these product wedges. There's a company in the US called RealPage. Now, they're in the news for being in trouble with price
Okay.
fixing, but
Let's
let's
take
take
that
that
aside. Yeah.
aside.
Yeah.
It's a company that offers landlords software that helps the landlord price the
Okay.
property. They reached really impressive supply coverage by doing that. And obviously, if you have all the landlords on your platform, you could potentially spin a
Yeah.
marketplace from that.
Yeah.
So it's a very interesting kind of way of fixing the chicken and egg problem. There's ways you can fake it, and I think plenty of examples from your previous episodes where you don't
Yeah.
have the
Yeah. Yeah.
supply, but you obviously say
Yeah.
that you do, and then you manually go out
Yeah.
and source it. Very
Yeah.
common one.
Yeah, thanks. Yeah, I really like what you said. I think you mentioned it earlier in this podcast that like liquidity is the product of your marketplace, right? Like I think that's just maybe a really good reminder because of course like at ShareTribe we sell a marketplace tech or marketplace tool, like a marketplace building tool that people sometimes get really obsessed about the tech, not realizing that actually let's first, you could have liquidity running with the most basic of services or like the most basic of technical platforms. Like so that's what you should focus on early stage rather than getting too much ahead of yourself in terms of like what are the tech requirements. As an ender, could you share any advice with early stage marketplace founders, whether of like something to do or something not to do specifically that you have seen?
A very general one. One of my colleagues has a great line that your investors are the only participants in your business that you cannot fire, or it's very hard to. In any startup, it's important to pick the right investors. But in marketplaces, because they're a very difficult beast to build, and they are very particular.
Yeah.
I think important to pick an investor that understands the marketplace model and has pattern
Yeah.
recognition, knows the different strategies and challenges. Don't be afraid to focus on a small niche, as I already mentioned. I think it's the right strategy. Plus, it can still be a very nice business and a very, sexy one. Maybe on the kind of the AI topic a little bit. AI will probably disrupt and help marketplaces in many ways. I think it pays to be paranoid and always on top of this, just to make sure you're not the ones being disrupted. whether that's AI being a new wedge into something, just an AI tool that can lead into a marketplace, whether it's, AI is becoming the new channel. So if people interact with agents, how does an agent find you? Do you want to build something with SEO dependency or Google
Yeah.
dependency? And there's a lot of questions there, I think, that founders should be asking
Yeah.
themselves.
No, that's fantastic advice, especially the niche. Like, honestly, I talk quite frequently with marketplace founders, and it's almost, I don't know, I would say one in every two conversations, I have the feeling that, you could make the market smaller. Like, you could focus more. You could drop a category, or you could drop a location and have go really to this white hot center, or whatever is the metaphor people like to use. Yeah. No, I think that's a great one to reiterate. Well, Dan, I want to thank you for your time and for sharing all your knowledge and experience. If people want to get in touch with you, where do they go? Where should they send their pitch? How should they get in touch?
My LinkedIn will be the best channel. I
And of course, people can read more about Piton Capital at pitoncapital.com.
The best source will be the portfolio page on Crunchbase, so they can get a sense for the companies we've backed over the years. The best source will be speaking to myself or one of my colleagues.
Got it. All right, Mira, thanks a lot for your time, and thanks again for coming on the podcast.
Oh, thank you so much for having me.
Thank you for listening to Two-Sided, the Marketplace podcast. If you enjoyed this episode, don't forget to subscribe. And if you really liked it, please give us a rating or a review on Spotify, Apple Podcasts, or wherever fine podcasts are downloaded. If you got inspired to build your own marketplace, go visit www.sharetribe.com. It's the fastest way to build a successful online marketplace business.